Well, to us, I think it's important to differentiate between the better, stronger developers versus those that are more on the weaker side, because what we've seen very clearly since late September is that policymakers have changed stance in terms of introducing more marginal easing measures. So overall, the easing measures are having some positive impact, but we think that the positive impact are really going to be benefiting the bigger, stronger developers. And that would leave, we think, still, elevated risk of defaults amongst the weaker companies. But we think overall, the contagion impact should be relatively well contained.
With regards to global credit and going into 2022 then, do you see an upside risk or a downside risk? Because what we're starting to see here is a period where, sort of passing beyond all the euphoria of reopening with economies and corporate balance sheet repair, that we could be possibly going backwards with a number of economies having to go into lockdown once again. What does that mean for the credit outlook?
I think overall, if you look at our macro forecast, we are still expecting global growth to be pretty strong into next year. Our forecast is global GDP at 4.5% for 2022, which is around 1 percentage point above potential. And obviously part of this is to do with the COVID situation, the reopening on some of the economies, even though there will be speed bumps along the way. But we do expect that growth to moderate as we head into the second half. So under that broad scenario, we don't think that's necessarily negative for global credit, though global credit spreads are relatively at tight levels. And so the returns are likely going to be low, but we don't think that's necessarily a negative scenario.